Again, don't this up. Just be careful. Just buy, hold, have a long-term time horizon, and learn how to take pain. And when there is pain, you buy more. Unless something changes the thesis that suddenly we're all going to turn to Neanderthals and nobody's going to use technology ever again, it is going up. It's as simple as that. And unless something changes that we're not breaking the financial system and that the internet has disappeared, we will go to blockchain technology. It's as simple as that. That's all you need to know. Everything else is just noise.
Bitcoin is back in the spotlight, and this time it's not just shattering records, it's rewriting the very framework of global finance. As Raoul Pal, CEO of Real Vision, puts it, Bitcoin is on the rise, and everything else is simply noise in the background. In a moment that will go down in history, Bitcoin briefly surpassed Google to become the world's fifth largest asset by market capitalization, reaching an extraordinary $1.87 trillion. This wasn't a fleeting achievement, it was a bold declaration. Bitcoin has firmly transitioned from a speculative experiment to a heavyweight contender in the financial world, now standing shoulder to shoulder with the likes of Apple, Microsoft, and gold. So, what's fueling this surge, and can Bitcoin sustain its momentum to reach $95,000 and beyond? First, let's talk about the whales. Big money investors are piling into Bitcoin like never before. Data shows that holders of 10,000 plus Bitcoin are accumulating aggressively, signaling strong confidence in further gains. These deep-pocketed players aren't just betting on a short-term pump, they're positioning for a long-term bull run. Then there's the tidal wave of institutional money flowing into Bitcoin ETFs. Over $1.8 billion flooded into these funds in just 2 days, marking the highest inflows in 5 months. This isn't just retail FOMO, it's Wall Street waking up to Bitcoin's potential as a legitimate asset class. And with sovereign wealth funds reportedly stepping into the game, the demand is only getting stronger. Macro trends are adding fuel to the fire. Easing US-China trade tensions and a softer stance from the Fed have reignited risk appetite across markets. Bitcoin, often seen as a hedge against uncertainty, is now also riding the wave of renewed investor optimism. Bitcoin is currently hovering around $93,000, teasing a breakout. The key resistance level to watch is $94,650. A clean break above this could send Bitcoin soaring above $95,000. If the momentum holds, the psychological $100,000 mark is well within reach. When Bitcoin moves, the crypto market follows. Bitcoin's recent surge into the top ranks of global assets is more than just a price rally. It's a paradigm shift. The lines between crypto and traditional finance are blurring, and Bitcoin is leading the charge. With institutional adoption accelerating, ETF demand soaring, and macroeconomic winds at its back, Bitcoin is poised for another leg up. Will we see $100,000 in 2025? The pieces are falling into place, but one thing's for sure. Bitcoin isn't just playing the game anymore, it's changing it. Meanwhile, Bitcoin just got a new corporate heavyweight. Jack Mallers, Strike's founder, unveiled 21, a pure-play Bitcoin company holding 42,000 Bitcoin, $3.9 billion. Unlike MicroStrategy's Pivot, 21 was built from the ground up for Bitcoin, introducing game-changing metrics like Bitcoin per share, BPI, to track value in Satoshis, not dollars. With Tether's backing and an aggressive growth plan, 21 aims to outmaneuver Saylor by combining institutional scale with startup agility.
The founding story, so I co-founded the business with Tether. I would say I've known the Tether group for over a decade. There just weren't that many Bitcoiners around over 10 years ago. So we've done a lot of work together in El Salvador, et cetera. We've been so inspired by Michael Saylor and all of the public companies acquiring Bitcoin. But I would say over the last few years, that inspiration turned into what we thought was an opportunity and a hole in the market that we could deliver on, which is bringing blue chip credibility and startup upside. We feel like we can bring enough capital and be big enough to win. We're small enough to grow, and most importantly, a pure Bitcoin business. A lot of these companies, they're pivoting from a past operating business. They're rebranding, changing their name. They're maybe selling video games to buy Bitcoin or selling medical equipment to buy Bitcoin. Right. And we're a purpose-built Bitcoin company. We're going to build Bitcoin products, Bitcoin cash flow, and we're going to give Bitcoin per share growth to shareholders and be hopefully the best way for investors to get Bitcoin exposure in the public public markets. All the Bitcoiners out there, we encourage you to check out our filing. We've introduced two new metrics to the public markets. One is BPS, stands for Bitcoin per share, as opposed to earnings per share. And the other is BRR, which stands for Bitcoin return rate. And my job and what I'm dedicated to do for our shareholders, in which we view similar to our customers, is grow our Bitcoin per share. So we're an operating company. And when you buy a share of 21, in a hypothetical sense, what we intend to do is, let's say our Bitcoin per share is 0.05. Our intent is to be able to grow that to 0.06 Bitcoin per share, 0.07 Bitcoin per share. Where a vehicle like an ETF, your exposure is static. So 21 is an operating business, and we will be building Bitcoin products, Bitcoin operative cash flow, and then using the capital markets to accretively grow the Bitcoin on our balance sheet. So we want our shareholders to get wealthier, get richer in Bitcoin terms, and our metrics encourage the market to view us not in fiat terms, in Bitcoin terms, because we're not here to necessarily beat the market. We're here to build a new one and encourage the world to adopt Bitcoin in a sense that we believe it hasn't yet. I truly believe my purpose on this planet is to try and help Bitcoin have a chance to change the world in what I believe is the right direction. And I think Strike and 21 both independently work towards that. So listen, we are hopeful to have our shares listed on a stock exchange under the ticker XXI. Today, we are trading under CEP, which Caroline mentioned is our Cantor Equity Partners, and that stock is trading in live today. If it's successfully merged upon closing, it will be XXI. We do intend to raise as much capital as we possibly can to acquire Bitcoin. Again, my one rule to my shareholders is it will be accretive. Our Bitcoin per share will grow. We will never have Bitcoin per share negative. At least that's our intent. Our intent is to make sure that when you're a shareholder of 21, that you're getting wealthier in Bitcoin terms. And that's my job as a CEO to deliver that. So we plan on raising capital in all different type of sectors and markets and really blending Bitcoin and incorporating it in the traditional financial system to deliver a powerful equity to the public markets for Bitcoiners. I gotta be clear, I'm not preaching a future that I can promise. This is hypothetical and this is our intent. Somewhere my lawyers are like, that's our guy, right? But our intent, Caroline, is that when you buy a share of 21, and let's say that's 0.005 Bitcoin per share, we go out and we intend to close deals, build products, add Bitcoin to our treasury to where in which you get a press release and you say, wow, 21's Bitcoin per share grew from 0.05 to 0.06. I just got more Bitcoin exposure. I got wealthier in Bitcoin terms just by being a shareholder of this company. An ETF is not an operating company. You know, IBIT isn't outgrowing your exposure to Bitcoin. It's a static exposure through their security instrument. Whereas for us, we're a business. I'm a CEO. Right. I get up, I work every day to grow how much Bitcoin your share represents on our balance sheet. That's the big difference.
What makes 21 particularly compelling is its unique Bitcoin per share, BPS, metric. Unlike traditional companies that measure success in dollars, 21 tracks shareholder value in actual satoshis. This radical approach aligns perfectly with Bitcoin's ethos while solving a critical problem facing MicroStrategy, the law of diminishing returns on Bitcoin accumulation. As Saylor's company grows larger, each new Bitcoin purchase has less impact on its BPS ratio. 21, starting fresh with its 42,000 Bitcoin war chest, has room to grow aggressively while maintaining meaningful accretion to its Bitcoin per share metric. The market implications are staggering. 21's planned $585 million capital raise will likely be deployed into additional Bitcoin purchases, creating immediate upward pressure. But the bigger story is the long-term structural impact. As 21 Capital builds out its Bitcoin-native financial products and services, it could become a gateway for institutional investors still hesitant about direct crypto exposure. The company's NASDAQ listing provides a familiar wrapper for traditional finance players to gain Bitcoin exposure through equity markets. Perhaps most importantly, it arrives at a perfect storm moment for Bitcoin. With the halving supply shock just starting to ripple through markets and spot ETFs already consuming available liquidity, 21 Capital's massive treasury and future buying plans could exacerbate the supply crunch. The company's 42,000 Bitcoin holding alone represents nearly 0.2% of Bitcoin's total supply, and that's just the starting point. As the company grows its operations and attract more capital, its Bitcoin acquisitions could become a persistent source of demand in an environment where new supply is increasingly scarce. The battle lines between 21 Capital and MicroStrategy represent more than just corporate rivalry. They showcase two fundamentally different visions for Bitcoin adoption. Saylor's approach proved that public companies could use Bitcoin as a treasury asset. Mallers is taking this several steps further by building an entire financial ecosystem where Bitcoin isn't just held, but actively utilized as the foundational monetary layer. If successful, 21 could become the prototype for a new generation of Bitcoin-native corporations. With Bitcoin currently testing key resistance levels around $90,000, 21 emergence might be the catalyst that finally pushes the market into price discovery mode. The combination of having induced scarcity, ETF inflows, and now corporate accumulation from players like 21 creates a perfect storm for Bitcoin's next parabolic move. Mallers isn't just building a company, he's building what could become the ultimate Bitcoin accelerator. The coming months will reveal whether this bold experiment can deliver on its promise to reshape corporate Bitcoin adoption while sending prices into the stratosphere. As Bitcoin flirts with the $95,000 mark, a high-stakes corporate battle is unfolding, one that could redefine institutional adoption and propel Bitcoin into uncharted price territory. Two competing visions for Bitcoin's future are emerging, led by Michael Saylor's MicroStrategy and Jack Mallers' newly launched 21 Capital, XXI. Their clash represents more than just a race for BTC accumulation. It's a fundamental shift in how corporations engage with Bitcoin, setting the stage for a potential supply shock that could send prices soaring past $100,000 and beyond. Michael Saylor's MicroStrategy pioneered the concept of corporate Bitcoin adoption, transforming itself from a business analytics firm into the world's largest publicly traded Bitcoin holder. With an astounding 538,200 Bitcoin, $50.51 billion, on its balance sheet, MicroStrategy has become a leveraged proxy for Bitcoin exposure, using debt and equity raises to fuel its relentless accumulation strategy. Treat Bitcoin as the ultimate treasury reserve asset and buy as much as possible. But now, a formidable challenger has entered the arena. The timing of 21 Capital launch couldn't be more consequential. Bitcoin is already in the throes of a historic supply squeeze following April's halving, which slashed miner issuance by 50% to just 3,125 Bitcoin per day. Spot Bitcoin ETFs have been consuming available liquidity at a staggering pace, with BlackRock's IBIT alone amassing over 300,000 Bitcoin in just 4 months. Now, 21 Capital's 42,000 Bitcoin treasury and its plans for further accumulation add another layer of demand pressure in a market where new supply is dwindling. If 21 Capital follows MicroStrategy's playbook and continues raising capital to buy Bitcoin, it could become a permanent bid in the market, absorbing coins that would otherwise trade on exchanges. Long-term holders, LTHs, have added 363,000 Bitcoin since February, and whales are hoarding roughly 300% of Bitcoin's annual issuance. This structural scarcity could propel Bitcoin past key resistance levels at $96,100 and toward the psychological milestone of $100,000 and beyond. Despite bullish momentum, Bitcoin faces critical supply barriers, with researcher Axel Adler Jr. identifying $96,100 as the final resistance from holders who acquired coins 3 to 6 months ago. Beyond this, the path to $100,000 opens up. A secondary wall exists at $97,000, where approximately 392,000 Bitcoin was last acquired. Many investors may exit at break-even, creating temporary friction. However, if institutional demand from 21 ETFs and corporate buyers overpowers this selling pressure, Bitcoin could shatter these barriers and enter price discovery mode. Also, analysts are closely watching for a Wyckoff reaccumulation pattern, which suggests Bitcoin could be preparing for a parabolic move toward $131,500, $144,900, or even $166,700. The key question is whether 21's entry, alongside relentless ETF inflows, will provide the fuel needed to sustain such a breakout. In addition, beyond corporate and ETF demand, Bitcoin is benefiting from a perfect storm of macroeconomic and geopolitical factors. The U.S. Treasury term premium has hit 12-year highs, raising concerns about Federal Reserve policy independence and long-term debt sustainability. Meanwhile, geopolitical instability and de-dollarization trends are driving institutional interest in non-sovereign stores of value. Standard Chartered predicts Bitcoin could reach $200,000 by 2025 and $500,000 by 2028, citing its unique role as a hedge against financial instability. Mexican billionaire Ricardo Salinas is even more bullish, declaring that Bitcoin is going to $10 million. He added, "I see BTC at 100 times more." These ultra-bullish forecasts come alongside key regulatory developments, including the SEC's collaboration with El Salvador on crypto frameworks and the repeal of SAB 121, further paving the way for broader institutional adoption. The battle between 21 and MicroStrategy represents a clash of philosophies that will shape Bitcoin's future. Saylor's model proved that corporations could use Bitcoin as a treasury asset, but Mallers is taking it further by building an entire financial ecosystem where Bitcoin isn't just held, it's the foundation of every business operation. The convergence of post-halving supply shock, relentless corporate and ETF demand, and macroeconomic uncertainty suggests Bitcoin is on the verge of a historic breakout. Whether 21 surpasses MicroStrategy remains to be seen, but one thing is certain. The race to dominate corporate Bitcoin adoption is heating up, and the winner could help propel Bitcoin to unimaginable heights. As Bitcoin approaches $100,000, the next few months will be decisive. Will institutional demand overpower profit-taking at $97,000? Can 21 Capital financial ecosystem outpace MicroStrategy's pure accumulation strategy? The answers to these questions could determine whether Bitcoin enters a new era of price discovery, one where $200,000 becomes the next target. Thanks for watching. Please remember to hit the like button, subscribe, and turn on your notification bell. See you in our next video.